Hello guys, so today we're going to be looking at our weekly outlook for August 4th to August 8th, 2025. So last week we saw how FOMC went, and we started seeing strength after FOMC as Powell didn't signal anything about rate cut for December. It was more leaning towards a hawkish side. And after that, as I told you guys last week, I actually will not be doing weekly anticipation versus outcome again. I think that is taking most of my time. So we're always on point because we understand the fundamentals that drive, or the macroeconomic economics that actually drives the market. So I just focus on giving out my weekly anticipation, and that is it. So last week we talked about how FOMC is deciding news that would actually elevate some news to becoming the top Gs. So after the meeting, Powell was hawkish and dollar started gaining strength, and then he signaled that he was more interested in CPI. So he has elevated CPI, you know, NFP also, but CPI more than NFP. Now after that, NFP came out, and then what happened? After NFP came out, we saw that there was a couple of revisions that came out. Now, NFP came out at 70 73,000 compared to 106,000 as anticipated. And then we got a June revision from 147k to 14k. Now we have also had a May revision from 144,000 to 19,000. So that was very, very terrible. It was very, very bad. We also saw ISM manufacturing reduce very, very well from 49 to 48. So these were like bad news, bad news. And then what happened? We actually saw dollar lose its strength after this event, which we're actually going to see in the chart. Now, if we look at euro, we saw that there was CPI for euro. CPI for euro came out, and then came out at 2.0, 2.0. So we are seeing yeah. Anyway, we'll discuss, and when I actually discuss more on euro, we'll talk about you know the significance of what has happened and all that. Now let's look at this week. And for this week, we just have few news, which is US ISM service PMI, and then we have the Bank of England rate decision, and then US unemployment claim. So we don't even have much news when it comes to Euro, GBP, and USD for this week. We just have for USD on Tuesday, and then for GBP on Thursday, and that's it. So, and also USD on Thursday, but nothing on Euro. So aside data, now when we look at the macroeconomics as regards to Euro, we'll see that we had a trade deal, and this trade deal has actually created some clarity in the market. So it has created some clarity, and it has also helped reduce the possibility of a potential rate cut for September. So the market is actually seeing the possibility that there won't be a rate cut this year, or even if there will be a rate cut, it might just be like early 2026, and or we might not even see a rate cut from the whole of 2025, the whole of 2026. So everything is not dependent on what data. Now CPI came out, we are seeing a positive CPI. So yeah, when Lagarde talked, when she was speaking at the July meeting, she was actually citing a focus on CPI, and then we could see the CPI coming out elevated. So it's reducing the possibility of a rate cut by September. Reducing the possibility of rate cut. So I think we have one more CPI before the rate decision, but let's see how it goes. But the possibility of a rate cut has reduced drastically. So we also have Germany, their cabinet agreeing to a draft a draft budget that will boost economic growth. You know, this will be voted on by September. So like, let's see what happens. You know, so the way we are seeing this is actually going to like boost the economy. Now we are seeing an increase in CPI, a momentum increase in CPI for July when it comes to euro. So that's also reducing part of the reasons why we're seeing a reduction in the possibility of a potential rate cut by September. Now the trade deal that came out, the trade deal, wow, it was catastrophic. Like, the market actually reacted negatively to it. When the market lacks clarity, sentiment comes in, and then what happens? People react at the extreme emotions, which can be fear or scare, or we can also have excitement or happiness. So these are two extreme emotions. So when market is at its extreme emotions, you shouldn't actually be involving yourself in that market because they are acting out of rational. But when everything relaxed, we're able to understand that there are loopholes in this deal, and some of these loopholes is this now. you know the trade deal is not expected to actually affect the economy that much, and part of the reason is because you see, EU as an entity does not have control over its member states on how they get their energy, and companies in their member states how they get their energies and all of that. So now they have pledged that, oh, we're going to buy $750 billion worth of US energy. That is $250, so $250 billion annually. Now, but Euro currently imports below $100 billion worth of energy. So how are they now going to cover up the remaining $150 billion? So like, it doesn't really add up. It's not adding up. So it's not seeming realistic at all. You know. So this is, so them as an entity, this is what they import below $100 billion. So, and they don't even control their member state on, oh, we decide where our member states are going to import from. It doesn't really happen. So like, there's a loophole in this deal. Like, it might not really be what it seems to be though, you know, and all of that. So it's not really going to have much of an impact on the economy. Now, I've talked about US and the NFP and all of that. So the NFP that came out and the revisions has actually increased the expectation for a near-term rate cut. So possibly by September. So let's see what is going to happen. We still have CPI, we still have one more NFP before the rate decision. So let's see what happens before then. And for Bank of England, we are expecting a 25 basis points of cut on Thursday. Expecting it on Thursday, and maybe potentially quarterly cuts because the GBP fiscal policy are not really encouraging. So might see them, continue cutting quarter by quarter up until even 2026. Then when we look at these fundamental reasons I've given you now, you understand that there is, because okay, while looking at euro holding by 2026, probably by 2026, if Trump appoints um a candidate that will dance to his rhythm, probably there will be more rate cuts and all of that. So we'll see that. I think Euro USD will actually be, Euro actually be the strongest of the three for now. GBP not so much, but yeah. So I'm also leaning fundamentally, not I am, but fundamentally, Euro is actually going to be the strongest. We're going to be seeing a kind of um strength in Euro, as more strength in Euro compared to dollars. So like, that is more bullish Euro USD. So I think that's it when it comes to the fundamentals. So let's move on to the sentiment aspect. Now under sentiment, we are seeing that Euro, August marks the beginning of strength sentimentally or seasonally when it comes to USD. But I noticed something. I've said in my previous weekly outlooks that we have two things that happen in every cycle of seasonality, and we have pro seasonality or counter seasonality. Now, if you look at July, you would notice that, even if you look at June also, you will notice that we are counter we are counter seasonality. We are running at a counter seasonality. So there is a Counter seasonality just means that now that we are bullish, we might now start having the inverse. You get, we start having the inverse, the inverse. So until whenever we notice that, oh, we're shifting here. So one of the ways you actually look at this is looking at past events for the past month and all of that, past week, stuff like that. Or also understanding that fundamental is the way regardless. So yeah, that's it. Now let's look at COT. Now for COT, I'm looking at COT. I was telling you guys last week that when you look at COT, you know that dollar has been saturated. Dollar sell is saturated. So we have seen this relief, and then obviously we might see some concession. In fact, if you look at COT very well, it's actually leaning towards. From my understanding, I have my own ways. The ways I look at my own way, I look at the COT. So it's looking like we'll just continue going bearish. So because from what I'm seeing from what happened from last week, the last COT, I think we're actually going to continue bearish dollar from here. So let's enter the charts. Now on DXY monthly time frame, first of all, every month we'll do two things. What are that? Look at the two possible levels for the up and the downside where the currency will go to. So we marked out that this bullish OB, this bullish monthly OB, this bearish monthly FVG. That is it for DXY where we are heading to. So now that doesn't mean it might not go beyond that or below that or whatever. Everything is fundamentals, but it's going to actually add some little bit of resistance or whatsoever. So when we go down to daily time frame, we might realize, okay, has this resistance been used up or not? Stuff like that. So if you go to Euro USD, we would see that we have marked out this monthly FVG here, and then well, oh, I didn't even mark out the level for this. Let me do that. Oh yeah, I did. You can see it here, this monthly FVG. I didn't see it, so yeah, I did. So this might be the level we might be going to for going down or go so on a monthly basis. Now if we look at GBP also, we have this monthly other block, bearish other block here. We have this monthly FVG level here. It was not tagged, so yeah, so there might be a squeeze, but let's see what happens though. Now if we look at the weekly time frame, we also have to mark out the two possible levels where we'll be heading to weekly wise for the bearish side and the bullish side. So we're also going to see that, okay, we have this low here. This might be a weekly low. This might be where we're heading to if we're going bearish, or we'll go to this weekly order block here. If we look at euro, we'll see this weekly OB there. We can actually see this weekly low here as a potential level that we'll be going to. So just know that these levels are going to act as resistance in some certain ways, but what I pay more attention to is what happens in the daily. The daily is most important to me. So now we'll look at this place. We are seeing this weekly order block here. We are seeing this weekly order block here as the two weekly levels I might be anticipating to get to, and all of that. We could see how this this weekly order block, right? So weekly OB, so monthly, that should be monthly OB. Well, I can't. Let me just keep going. Let's keep going. I'm trying to not to make this video too long. So yeah, so on the daily, we are seeing this daily FVG. We might actually slide in here. There was a daily FVG actually deleted today where market has slid into. So that's what is causing this little resistance. So we might actually slide into here, touch this weekly order block, and then continue going up. So this is where this weekly order block can help us push price up, and then we'll continue going up. We might see some resistance here and all of that, or we enter here, see that resistance, push up, enter this FVG, and then we'll continue going down, which is more likely because of fundamentals. Now if we look at Euro USD, sorry, I'm being a little bit fast. I don't have enough time, so that's why I've actually not done this during the weekend. So here now for Euro USD, we're in the weekly order, in the daily order block, so we might just see market move from here, You see this weekly OB, just have some resistance, and then right that place we also have this daily FVG, so sliding, have some resistance, maybe come back here and then we'll continue going up, something like of that sort. So for GBP, you see GBP, gearing up and all of that. So my CGBP, just go in there, do whatever. But if we look at CP, we will notice that CP, which is the most important thing, CP is bullish for GBP USD, CP is bullish for Euro USD, and then for DXY, CP is bearish. That's what matters. So it aligns with our fundamentals. So there is nothing bullish about DXY at the moment. It's bearish. So that's it for my weekly anticipation. So see you guys for the next week and have a nice day. Also, for beginners, go follow through on my course. I'll dropping it once every weekend. I'll be dropping it every weekend. I'm dropping it every weekend. So follow through on my course. If you are still learning, if you are still finding it difficult to make accurate predictions and entry like we do, I don't really like posting entries. It's not necessary. It's just a way of selling some fake illusions to people, and they think that, oh, you can do this and all of that. Yes, you can, but with the right knowledge, not just by drawing things. There are a lot of things I actually look at. You feel me? So, and everything works, everything technical works. I'm always going to say that. And then don't box yourself towards a particular level of knowledge and say, oh, I'm an IT trader, I'm a support and results trader, I'm an MBA trader, I'm a trend line trader. Be vast, learn so many things, integrate so many things, and then work with it. I use so many other things, apart from it's just I picked things that actually benefit me from ICT, which is other block and FVG. I love that concept. I picked other things from other places. I use MAs, I use support and resistance, I integrate so many other things. I use different indicators. It helps me make things easier for me. So don't box yourself towards a particular um side and say, oh, this is just it for me. If it's not working for you, try to integrate other things. That might be what you need to actually break out. So yeah, that's it for me. So follow through on the courses, understand what drives the market, how the market moves and all of that. Understand trading at its basic core simplified, and then how to enter. I'll be raising some advanced courses, and that is never a problem. Understand what moves the market, how the market moves, how the market reacts, and all of that. So understand the basic core concept of the market. So if you're still a beginner, or you know somebody you want to help them understand the market, you can recommend my courses to them. It's free. I'm not charging for anything, and I'm not intending to charge for anything ever. So yeah, I just do this for yeah, the love I received also, during my own time, got the knowledge, handed over to me without payment and all of that. So it's expected that I have to, stretch out that same hand so others. Okay, people doesn't appreciate stuff like it, but yeah, just have to do it. So see you guys on my next week anticipation, and then anticipate also the part 3 of the course I'm currently dropping right now. So yeah, thank you guys, and God bless. And please remember to subscribe, like, and share. Thank you. If you actually find it beneficial to you. So thank you very much, and have a blissful, awesome, and amazing trading week.